Pedro Guaso is the chief executive of the Office of Investment Management of the UN Pension Fund. He's responsible for a fund of $80 billion of the UN employees and many of its affiliated entities. And he reports directly to the UN Secretary General, Antonio Guterres. So for our audience, Pedro, maybe you can describe a little bit in more detail what the UN Pension Fund does and what its asset allocation is and what are its objectives, its investment objectives.
Thank you, Henry. It's a pleasure to be here with you, and thank you for the invite. Let me first point out some important issues. One is we are the pension fund for the whole United Nations system. We're almost close to 220,000 people. More than 135,000 of them are active staff, actively working and contributing to the fund, and already more than 80,000 people, retirees and their beneficiaries, receiving some benefits from this fund. We're fully funded. We have a funding ratio of 117%, and that is due to the good contribution rate, but also to the good historical performance of our fund since the creation in 1948. Right now, our portfolio, the size of our portfolio is $80 billion. We have allocated 50% in public equities, following your MSCI ACWI IMI index. Of that 50% of the total portfolio, 92% we manage it actively internally with our own investment officers, and 8% is managed actively through external managers. The second biggest allocation is on fixed income. We have allocated 32% of our total portfolio in fixed income. The largest part of it, the equivalent of 30% of our total portfolio, is in dollars denominated bonds, following the US Ag index, and only 1% of the total portfolio is in emerging market debt. Of the total portfolio of fixed income, 80% is managed internally and actively, and 20% is managed externally passively. Finally, the remaining 18% of the portfolio, which is allocated to private markets, right, in which 9% is on real estate, 8% of our portfolio is on private equity, and a small percentage of 1% on infrastructure funds. It is important to tell you, Henry, that all the private markets investments that we do it directly in funds, in investment funds, or through co-investments, right? So besides using our benchmarks to measure our performance, we have established by our governing bodies a minimum annual rate of return of 3.5% that we measure in the long term, right? And of course, that long-term annual rate of return of 3.5% is enough to keep and maintain the fully funding status of our fund.
Well, thank you for that description of the fund, Pedro. You have been a leader not only in ESG but also in understanding climate change risk and opportunities to the pension fund. Now, most people will think that you're doing this because you're part of the United Nations. The United Nations clearly is one of the most important leaders in the world in making our world aware of the impact of climate change in everyday life, in our economies, and for sure in our financial markets and our investment portfolios, around the world. But of course, you also have 200,000 plus beneficiaries that you are a fiduciary for, and therefore a lot of what you've been doing is for the benefit of those beneficiaries and their investment returns. So maybe you can describe for us, all of that, to make sure that our audience understands what are your true investment objectives. Why are you a leader in ESG and in this case, more specifically in climate investing for the benefit of the beneficiaries?
Yeah, that's a great question, Henry. So while understanding that we have to return value for our portfolio, meaning that it has to remain profitable while having enough liquidity and convertible, we also want to be leaders, as you mentioned, in terms of sustainable investment, right? And what we have found out, Henry, is that you can achieve both goals without sacrificing one or the other. We hadn't found a trade off between being sustainable and being profitable in the long run, right? So what we do in our sustainable investment strategy is, of course, we integrate ESG in all our portfolios, not only on the private sector portfolio, on the public portfolios, but also on the private portfolios, we integrate ESG. And also, we have put together the most ambitious decarbonization goals, and we have achieved the most ambitious decarbonization targets within any other asset owner, right? How do we do it? We have done it threefold, right? One is we have, as you said, we have understood what it means and what are the impacts of carbon emissions in our portfolio, and we have learned how to measure them, right? We have also understood how those carbon emissions affect all our portfolio, and we have worked together with our stakeholders, as you mentioned, getting the guidance from the General Assembly, but working very closely with each one of our portfolio managers to understand how they can improve and decrease over time the carbon emissions on their own portfolios on all the asset classes, right? So I have to tell you just briefly that 3 years ago, when we started the discussion here, we were ranked as number 26 as the most responsible asset allocators. And last year, we went all the way to first place as the most globally responsible asset allocator in the world.
So, Pedro, that is a key statement that you're making, because there's so many pension funds around the world that think that by them adhering to the development goals of the UN or the ESG criteria in general, or the climate change risks in particular, that they will need to do that with sacrifice and returns, which is obviously not their mandate. There clearly is a big debate going on in America, precisely, about that. What is the fiduciary duty of a pension fund to its pensioners? So I'm very glad to hear that you have been able, to do both at the same time without sacrificing returns, to the beneficiaries. Now, let's talk a little bit about the how you've been able, to achieve that. Clearly, you have a very complex portfolio. 50+% is public equities, 30 or so percent is fixed income, but you also have a fairly large private asset class portfolio between real estate and private equities and a little bit of infrastructure. And obviously, a lot of your public portfolio is internally managed, so that gives you some flexibility. But a large, basically a large part or all of the private asset class portfolio is commingled with managers outside your direct control. So, what are some of the things that you still have to do, obviously, to complete the job?
Thinking back, Henry, I think that the most important decision that we made was to join the Net Zero Asset Owner Alliance, right? In the Net Zero Asset Owner Alliance, when we joined more than 2 years ago, it was composed of something around 35 different asset owners, pension funds mainly, and insurance companies throughout the world that had already been working for a couple of years back then on measuring, setting the baselines, understanding the science, and working together on common ways to tackle this, right? So we learned a lot from them, from these asset owners, pension funds, and insurance companies. When we were created in 1948, we were created with the exclusion of we cannot invest in weapons, for example, right? Then in the 60s, we added another exclusion, which was tobacco. A couple of years ago, 3 years ago, we excluded also thermal coals. And finally, a couple of years ago, as part of our decarbonization strategy, we excluded from our portfolio the fossil fuel producing companies, right? That were not transitioning into green. You can read in our TCFD report from last year, we clearly spelled out we divested $2 billion of our public equities and fixed income portfolio, which allowed us to decrease 40%, 40% the carbon emissions in those public portfolios, right? And of course, we can do it in the public portfolios because it's a liquid market in which you can buy and sell easily securities. But once again, look at the numbers, right? We by divesting only $2 billion, that was the equivalent. That was probably a little bit more than 2% of our portfolio. We managed to decrease 40% of the carbon emissions of that portfolio, right? What we did in our private markets strategy, we said, of course, it's more difficult to divest when you have private markets investments because it's not a liquid market, right? But what we did working with our fund managers, we told them we cannot add any more investments with the same restrictions that we have, right? Weapons, tobacco, and fossil fuels, including thermal coal, right? So what we decided voluntarily was that let's divest from these $2 billion on fossil fuel companies that are not transitioning so that we can focus all our resources to engage with all the other companies that represent the 60%. Because the 40%, the first 40%, was the easiest one. That's what I always say. But the most difficult one will be the other 60% that we have to decrease to get to net zero, because those carbon emissions, Henry, they come from every holding that we have in our portfolio, right?
The two, three questions that I normally get asked by people in your position are: where do I start? Do I start by the public assets? Do I start with the private? Do I start, by by the real estate portfolio? The second question is: how do I measure the carbonization, and what part of the portfolio will give me more, will give me less? Clearly, what you have done is you have attacked the part of the portfolio, oil and gas and fossil fuels, that is the most carbonizing. But every single industry has a level of carbonization in the world that creates risks, to the portfolio. So I get asked that. And the third question that I get asked is, what is the appropriate tracking error? If you move too far and too fast, you may end up underperforming or overperforming relative to the benchmark. And if you move too slow, you are likely to underperform because you will be in sectors that are being repriced. What would you recommend to somebody who's starting just now, as opposed to you having started many years ago, based on what you have learned, in the last few years?
I mean, I always say the first thing that you have to do is to approach others that know more than you. If anybody's still not part of these groups like the Net Zero Asset Owner Alliance or the Climate 100 Plus and other groups, I think that that would be the first thing, because the data is there, the measurements, the methodologies, and the science can be easily achievable. Then when it comes to public markets, the question is, what is your benchmark and how much tracking error are you willing to take, right? We took a very pragmatic approach, and we decided, together with investment officers, we decided to customize the market benchmarks, right? So I mentioned that, for example, we use your MSCI ACWI IMI as our benchmark for the 50% of our portfolio that is invested in public equities. But we customize it based on our methodology of exclusion of those companies that I mentioned on tobacco, weapons, and fossil fuel companies that are not transitioning, right? And we adjusted it because that is for us the investable universe that our investment officers have, right? So, and it is just fair to measure their performance based on what they can invest. So when we went to our governing bodies and our oversight bodies, we told them, you know what, we have decided to divest or not invest in this type of asset classes because of our values, right? So we will measure our performance based on what we can invest in. So there's no discussion in our organization to compare against the market benchmarks per se, right? Also because, as I mentioned you, we have a clear target of what is the minimum performance expected to maintain the fully funded status, right? So we are tracking our performance vis-a-vis those customized benchmarks, right? But then you have to check yourself against reality, right? How are you performing overall vis-a-vis your other peers, right? For that, we don't use the benchmarks, Henry. For that, we have other type of information. There are some companies out there that do benchmarking, comparing performance, risk, costs between different pension funds. And what I can tell you is we have the same performance as our peers, no? And the whole database is like 309 different pension funds. But our peers, according to this company, are 19 different pension funds, based on style of investment and based also on size. So we have the same return as they have, even with our exclusions, right? And then this is something that I don't like saying, but I checked the return that our benchmark have in the last year vis-a-vis the benchmark, the plain benchmark, right? Including those companies that we excluded from, and the return is exactly the same.
So, Pedro, one other important topic to asset owners is the issue of divestment versus engagement. So, what have you done in that trade-off at the UN Pension Fund that could be of benefit to our audience here?
We have a very small sustainable investments team. Our sustainable investment team, it's 4 people only, right? When we were thinking and when we were trying to decide to divest or not to divest, for example, on the fossil fuel companies, we decided to divest because that will give us a very big impact on the decrease of our carbon emissions of our portfolio. Of course, the people that don't like divestment, they say, well, you're just passing the problem to somebody else, right? And you're not really decreasing carbon emissions from the world. We say, yes, it's true, but over time that will happen, right? But also because we feel that fiduciary responsibility, we don't want to be the last ones holding those investments in those companies because we think that the present value of those companies is zero, right? So what we do is our engagement strategy, if you want, has it's twofold. One is what we call the group engagement, right? As I mentioned, we're part of the Net Zero Asset Owner Alliance, that is part of the G funds. We're also part of the Climate 100 Plus Alliance, that is for climate change, right? But we're also part of the PRI, and we work with some partners like Hermes and ISS for engagement and do the responsible voting, right? So that is what we do as groups. And we don't need to be owners necessarily of or investors in the companies in order to have effective engagement with those companies. And then we have the more direct engagement, right? And what we have done is we, based on the remaining companies that we have sorted them out based on the largest exposure or largest contribution to our carbon emissions, and we're going to be choosing just a handful of them at a time, right? So we're trying to be very precise and very direct on which companies in our portfolio to engage, to see, as I said, to help, how can we help them in terms of investing in them so that they can migrate to net zero or achieve net zero and have less be dependent on fossil fuels.
No, thank you for that. And like your organization, which you probably have a lot more resources than the typical pension plan, but you're still limited in the number of people you have on the investment side. So you have to leverage other organizations to engage in that engagement with companies. One other aspect of this process, Pedro, is is it a destination or is it a journey? A journey is almost like a way of living that you constantly have to be looking at the climate risk of the portfolio. So, how do you see yourself in that journey? And what are some of the things that you're still acting upon that are significant work that you still need to do? And what are some of the things that you think you've been able to master already?
Yeah, for example, I'm going to use the Net Zero Asset Owner Alliance case, Henry. When this group of asset owners met, we said, okay, we recognize that this is a journey, right? We know where we all have to get, and we know that by 2050 we have to have a net zero on carbon emissions portfolio. Now we said that's a very long-term goal, right? So we fixed intermediate goals for 2025 and 2030, right? To, as you said, to meet, fine tune, and adjust to whatever we needed. So we all presented goals for 2025 and 2030. Once we move forward with decarbonizing our portfolios, some of us are divesting from those fossil fuel companies or not. Another important part that we have to do is not only divest or engage in the current organizations that are generating those fossil fuels, but also invest in solutions, right? We will not get to those goals of net zero in 2050 just by squeezing the fossil fuel companies, right? Our investment horizon is 50 years. Is where do we put our money today so that our whole portfolio, recognizing that our whole portfolio follows the whole economy, how do we and where we invest our money so that we create the economy that we want in the future, right? And that economy that we all want in the future is an economy that it's sustainable and that it's not damageable, and where we have contained the increase on the temperature of the world.
Well, Pedro, we cannot thank you enough for this conversation. We have been working with you and your team for many years now, and we have seen the cutting edge analysis, the leading and bold decisions that you have made to begin this journey of attacking the impact of climate change on your portfolio and what that will mean to the pensions of so many people over a prolonged period of time. And we have seen you as a leader, your organization as a leader in tackling these issues. So initially, people may think that, of course, the UN, of course, they have to be doing this. And for sure, that created the driver, that created the catalyst for you to embark upon this journey. But uh, that was just the beginning. What you have now done is being able to look at that catalyst, but apply it to a fiduciary duty to your pensioners to give them high risk adjusted returns for the short, the medium, and the long term, away from whatever mission the UN has, because obviously those people need to live off, these pensions when they retire. So we thank you a great deal for the work you're doing. We thank you for the leadership that you can provide to the asset owner industry. And we hope that this case study that we've written up, plus this discussion that we have had, provide an impetus for others to follow in your journey. And if they want more advice or more recommendations or more stories or lessons to be learned from what you've done, that they can reach out to you or to us. And obviously, we'll put them in touch with you.
Thank you, Henry, and thank you for your partnership. As I always say, you have to get your data right, you have to get your partners right, and you have to get your strategy right, right? And you are great partners on the data providing sphere. So thank you for all the support and that of your team as well. I'm happy to share more experiences with other asset owners.